Good afternoon, traders. This is Trader Tim from eMiniMind.com doing a Tuesday market analysis video. Today is the 16th of January 2018, and we've got our first, what I would call, correction bar in the markets. The last couple of weeks, we have closed up every single day. We had the small move lower on the 10th, but we still closed up on the day. And today is really the first day where we have not only a down day, but we have a break in trend that we haven't seen in quite a while in terms of this straight up move. You can see the uptrend line that I have below us is very, very far away from where we currently are at. This little daily 50% retracement just really includes this 1 day pullback. And then if we draw from that low up to highs, that does give us a 2772s that we sort of paused at this afternoon and reversed. I'm not putting a whole lot of weight on that. I wouldn't be surprised if we make a move back down to the 2750 level. And if we take a look at the market profile here, we can see not only was today, we gapped up and moved lower, we have this enormous value area because of that, but we also had a bearish engulfing pattern, and it's a lot easier to see here on the market profile. We have a bearish engulfing of the value area today engulfing Friday, and the low of today being put in lower than Friday. We came right down to the Thursday high before bouncing, and today's profile, a solid trend day to the downside, something we have not seen in quite a while. So what does this mean for our week ahead? Well, it should mean that better trading opportunities are going to be on the horizon. This move up was very challenging to be a part of. There were not a lot of quality pullbacks, low risk entry points. We pretty much had a gap up and then a sort of drift higher. Not a strong, violent move, but just, by the end of the day, we'd be up another 5-6 points, and it just kind of continued on throughout the last 2 weeks. And with today's price action, I would be cautious if we trade within today's bar tomorrow. That would be an inside day. But if we break today's low, then we could see some bigger body selling, some nice trending action. And as you probably noticed with today's price action, the moves down have been a lot sharper and a lot stronger, as you can see, than the moves up. We set up, we hit the negative 23, and then we accelerate beyond that. And as we move down throughout the day, you can see all these little retracements down in here. Still holding, fairly technical. For example, here in the middle of the day, it looked like we may be reversing. We broke the little swing high and set up in a nice little long. That pulled back to the 50, traded right to the negative 23, and then a little bit beyond that. But overall, I would expect the trading opportunities to be getting better with volatility and a little bit of fear to the downside, a little bit more participation by the bears rather, to the downside. So as we head into the week, I'd be looking for, where are the resistance levels going to fall? And I mentioned that 2750. That's really the only thing on my horizon right now that would act as some solid support here, other than the consolidation back here at, we'll call it 2700. So those two big round numbers should act as decent support, or at least a pause, maybe a candle that breaks down trends most of the day, tags the 2750, and then bounces into the close. The NQ, the ES, the YM have all been looking really good and trading really good. The ES hasn't had a lot of great opportunities, but it's still been a decent chart. For example, today we opened up this morning and we set up into a long, and once we broke that 61.8 and took out the swing low, we set up in some really nice short opportunities, and this has really been the first time that we've had a 15-minute long break and then continuation to the downside that sustained, for the rest of the day. We really have not had any selling to this effect, and part of it. Sometimes what happens when you have markets like the cryptocurrencies, people get involved in those markets and then get turned on to sort of the trading world, and then there's this new influx of traders, and that can sort of cause these thin run-ups like this, and then once the selling starts to occur, the stops can get taken out pretty quick, and we end up retracing or consolidating. I wouldn't be surprised if we even have like a bull flag that sort of drifts down and to the right slightly, maybe tags the 2750 and then bounces. So we're by no means in bearish territory. Even if we come all the way back to 2680s, I wouldn't consider that the trend line even broken at that point. But we do have a lot of unfilled gaps below us and space below us for us to move down with a little bit of momentum. And if some of that momentum accelerates, I wouldn't be surprised if the media starts, hooting and hollering about major correction and bubbles and tops and that sort of thing. Even with the sell-off today in in Bitcoin and a lot of the hype around bubbles and the value of the cryptocurrencies and things like that. Only time will tell if the Bitcoin function of Bitcoin really takes off. So those of us who've been in from the early stages, we've taken substantial profits, and the goal is not to trade the currencies, the cryptocurrencies. It's to ride it out so that if it does go to 100,000 or 250,000, in the next 1, 5, 10 years, you've got some skin in the game. But if you have all your eggs in one basket, when it does move, you're going to be scared out, and the fluctuations will be too much to handle day to day. So, uh, lesson is keep your positions small, keep your trading accounts separate from your investments, and stay focused, and don't lose sight of, we are still in a very, very strong uptrend. So even if the short-term trend turns bearish, I wouldn't be surprised if we, you know, get some sort of bounce that then may become playable to a bigger short. But in the meantime, you got to trade what you see. And if we trend lower or sideways in the short term and then bounce, then we could set up into a larger short. The major, well, the previous swing low being a 36.50s, and the more major swing low back here at 68.75. So a couple key areas to watch for. I have updated the market profile in the member dashboard, so you can get a copy of that. And if you have questions, feel free to shoot me an email, tim@emoneymind.com. Thanks everyone. Have a great week.